Hello and welcome back. Hope you're good, doing well. So we're gonna talk about the market. Hello. Hope you're good, doing well. So hopefully you can hear my sound, and I hope that the sound is there. Okay, so let's talk about the news. So we are having a busy week, and we are having CPI data is going to be released on CAD today, and then Tuesday we're gonna have rate decision from Reserve Bank of Australia. Just a second. So we are having rate decisions, couple of rate decisions. So highly likely that they're gonna raise the interest rate. The Reserve Bank of Australia, they're gonna raise the interest rate. Very likely they're gonna raise the interest rate, right? And we're gonna talk about that too. So the current rate is 3.85, and highly likely they're gonna raise it to 4.10, which I guess going to be the highest among the majors. And that's actually keeping the Australian dollar stronger. This is the main reason that the Australian dollar is getting strong. So we're going to talk about that. I mean, premium currency, Australian dollar is playing as a premium currency. So we're going to talk about that, and then we're going to have Bank of Canada rate decision, and they're not going to raise the interest rate, so 2.25, and highly likely they're going to go with the same, so no change. And we're going to have the Fed rate as well on Wednesday. So I don't think so we're going to have any rate hike from the Fed at all for the 2026. We're going to talk about that too. So if we're going to look at this, all right, so 99% that the no change. All right, so you're gonna have on 18th of March. All right, so 350, 375. They're not gonna do anything, no change. All right, so you're not gonna have any change from the Fed. All right, and look at the April, no change. July, chances are coming down. All right, and October, December, yeah, so very likely that we're not going to have rate cut at all from the Fed, and if things get better in the energy sector, then you can expect that Fed to cut one maybe one, or if let's say oil drop aggressively, then you can expect two. So this is going to be a bullish story for the dollar for the whole year. All right, what market was expecting. Okay, what Trump was saying, they don't want stronger dollar. All right, tariffs are there, they want weaker dollar to get an edge. Okay, but suddenly we saw that the conflict started in the Middle East, which caused the oil shock. All right, and things completely changed from the Fed perspective. All right, so very likely we're not going to have any rate cut from the Fed, and dollar is already gaining based on that, on those expectations. Dollar is already gaining. All right, and yeah, where we were here. So rate, we're not going to see any rate move, highly likely you're going to see that they're going to be hawkish. All right, they don't have any options left to just turn hawkish. Okay, so I'm going to look at the oil market, will reprice for the inflation. Right, so and there you go, the oil. All right, so previously when we had that oil shock, this was the oil shock. Okay, inflation came from after 2020. All right, inflation came aggressively after 2020, and inflation hit 10%. All right, and we are having another oil shock, and we can expect inflation to pick up. And if inflation pick up, all right, so let's pull out the inflation chart with that. All right, so inflation can inflation came when we had that, you know, when oil went higher, we saw inflation. Inflation came up, came back. And now we are having another shock on oil, another spike on oil. Okay, so we can expect inflation to pick up. How far it goes, we'll see. Going to be the question, how far it goes. But obviously, we're going to see that the inflation going to pick up, right? And let's say if it goes to 4, all right, or 5, still going to be a very good reason for the Fed to not cut the interest rate, all right? You are having inflation shock. Okay, so we are having a Fed rate decision, all right? So Fed rate decision, so we should not expect any rate cut from the Fed as long as we see that the oil remains above $100. Okay, and we can expect dollar to stay strong. And then we're gonna have employment change on the Australian dollar, then the policy rate decision, okay, from the Bank of Japan. So they're gonna try to be hawkish, okay, but we shouldn't expect any interest rate hike from the Bank of Japan, as higher, they are also already having higher inflation, and oil is going higher, which can push the yen lower, and the inflation can also tick up in the Japan, okay, and Bank of Japan can try to be hawkish. They are in the box, okay, actually they are in the box. So their debts are very high. So if they start going aggressively to raise the interest rate, that's going to be very bad for their economy. So they're in the box. What to do? Either fund the government with the cheap money or start to raise the interest rate. So they are in the box. And we are having another rate decision from the SNB. All right, no change. Yeah, but they can say that they can intervene in the market to stop their currency getting stronger. All right, so not much. And we are having another rate decision from the Bank of England. All right, and Bank of England is not going to do much. Previously, there was before this war, the Middle East war, okay. There was the possibility to cut the interest rate, okay, but we shouldn't expect any interest rate cut from Bank of England now after having the oil shock or the Middle East war shock, whatever you want to call that. Okay, but we shouldn't expect the rate cut from them as well. So we shouldn't expect any bank to cut the interest rate. All right, we should expect these banks to start looking to raise the interest rate. All right, I mean completely 90-degree change into their policy. All right, and the same with the with the ECB. All right, ECB is also gonna try to be hawkish. All right, but we should expect strength on the euro because of the hawkish ECB. The reason is very much simple, right? Oil is rising and Europe is struggling with their energy, supply, which is bad for the euro. All right, so this is the calendar for this week. Very busy calendar, okay, and we should expect some volatility during this week. All right, no, not expecting any rate cut. I'm not anticipating any rate cut from the Fed at least till July. All right, at least till July. Yeah, till July. So let's go and look at the charts. So oil, all right. So oil is very important these days. We were talking about the oil in our group that oil gonna go higher, all right? So oil is rising aggressively higher. We were expecting oil to at least go above the 100 when this war broke out, okay? And we saw that oil spiked up to 120, which is a very good move. Okay, so currencies which are sensitive to the oil, all all right, they gonna struggle to rise. And any asset which is, I mean, if we compare that with this oil shock with the previous Ukraine crisis, okay, we can clearly expect that which assets can struggle to rise and which assets can pick up. All right, so if I'm gonna pull out and look at the, let's see, look at the indexes. All right, so let's see Nasdaq 100 index, and if I'm gonna look at the 2022, I guess we had that war back in 2022 here. Okay, we saw a strong rise there, okay, on oil. Let me pull out some cross line. Okay, we saw in there, and then we saw that the inflation came there, okay, and rates went higher. Longer term rates went higher, right? Longer term rates like US 10 years, 20 years, 30 years, even short term rates, they went higher aggressively, which caused the indices to struggle. All right, indices to struggle. And then we saw a huge bullish run over there on the Nasdaq 100X and other indices as well, like US 30 and 2000 and 2003, and Russell 2000 and Russell 2000, 3000. All right, so similar thing gonna happen over here. Okay, what's gonna happen? We should expect inflation or stagflation risk. Okay, so stagflation risk means we're gonna see some struggle on indices, okay, like we saw there back in 2022, and then we're gonna see a huge run up over there, all right, on the indexes when oil will start coming down. All right, but right now we are within this correction. This is a weekly time frame chart. We are in the correction, which is very much similar like the 2022. Okay, so stagflation risk, you're gonna see the risk on assets, they're gonna run aggressively higher. So stagflation risk simply means that print more money, all right, print more money to run the economy. Simple. Okay, which gonna push the risk on assets aggressively higher for longer term. All right, so that's the comparison. Okay, and if I'm gonna look at the oil right now, we were expecting oil to continue. Okay, what happened here? Okay, let's talk about this. What happened here within this area? We saw, okay, the war started on 27. Okay, what you need to look at the past first before you start looking at the future. You need to understand what has happened over there in the past. Okay, so 27, war started on 27 in the Middle East. 27 here is the 27. Okay, so it broke out 27. So war broke out, oil started to rise. Okay, we were expecting oil to continue to keep rising. We saw a huge jump over there. All right, so I do have those charts. So let me find out those charts, guys. So when we were expecting oil to spike up, just to let you know that what has happened over there, and then what we should expect. Okay, we saw a nice rise on oil, and then we suddenly saw, you know, a gap up on oil, and the gap up caused by the escalation over the weekend, and then the Trump administration started to play down to control the markets. Let me find the oil chart. There you go. Okay, so we were expecting oil to rise from 86 areas to continue its bullish trend. I'm searching a bigger time frame chart. There you go. I find it. So okay, so we saw that the oil went above the 85 and went all the way towards that 120, and we were expecting this to go that higher. So there is still a risk that we can see some strength on the oil. Okay, but there is also another risk, we can see manipulation on the oil. That's why I'm spending some more time on the oil. The war started on 27. Okay, so let's leave it. It's taking so much time. I have to scroll back a lot to find the oil chart. Okay, so we need this chart as well. So I'm going to talk about this chart as well later on. So this is also important. So we're going to talk about this as well. Okay, but right now the things has completely changed here on this chart. This is the interest rate on the Australian dollar and the interest rate on the New Zealand dollar. So later when we're going to look at those charts, we're going to talk about this. Okay, so let's leave it. It's taking a lot of time, so let's just move. Okay, so you're expecting oil to rise, okay, and oil went higher. So what happened? What I'm trying to explain to you guys is that we saw oil rise because of the war, okay, and then we saw suddenly that oil aggressively dropped because something has happened over here. All right, and we saw that IEA made a decision to release the oil at this area, somewhere here within this area, and then we saw 400 million barrel, and then we saw that the oil started to rise after that. Okay, but there we saw the intervention. Okay, there we saw the intervention. So it is being said that the Treasury, US, Treasury Department, they intervene into the market. They sold the front end month contract on the oil, which caused that price to drop. Okay, so what this is telling us that they don't simply want oil price to continue to keep rising, and we should expect intervention from them as well at some point. Okay, so this is telling us that if you're buying oil, all right, you're buying oil right now and you're expecting it to continue to keep pushing higher for longer term, all right, you already missed the move from the lows, like from the 80s, from 70 areas or 60 areas. You should expect oil for short term up. Okay, short term buying, take out your profit and run away. Don't hold it for longer term for upside, as we can see intervention again from the US administration. They can intervene again in the oil market. They can artificially press the price. We saw that there is a complete disruption in the oil market from the Middle East. Okay, oil is not coming out as it was coming out before this war, so we can expect oil to continue to keep pushing higher slowly. All right, we were expecting previously here and we were expecting it to go all the way this top. Okay, we are still within that trend, and we can still we still can expect it to continue, keep pushing higher. I don't have that here. I posted that on the YouTube. All right, so yeah, so still we can expect it to continue its trend for upside. And be prepared for the intervention as well. All right, the Trump administration, they don't want the stronger oil prices. All right, so these corrections to, I mean, the trend to hold and continue. We can see that this correction, which is just trying to form over there, that I can continue to keep pushing higher. All right, so short-term profit, short-term, you know, trades, and keep taking your trades off rather than holding the trades for longer term. Right, so that's the oil. Oil is the key right now. All right, now let's move on to the dollar, and then we're going to talk about the others. All right, so we were expecting a dollar to get stronger last week. All right, and specifically we were expecting you know, dollar to gain against the euro. Right, we got a very nice move on the euro dollar. Right, so I'm gonna open the euro side by side. Right, we were expecting a very nice, we were actually expecting a bigger time frame drop on the euro since very long. Okay, we are having that right now. It seems that the longer term reversal has just begun over there. This is the chart which I was trying to find on oil, and unfortunately it took a long time to find. All right, so we're expecting oil to go through. Okay, and there is still a risk for the oil to break through that top. Okay, in longer term we can go above that 135. Okay, if this war the Middle East war drags on for another 15 to 20 days or even a month, okay, we can expect oil to go much higher. Oil can go above that 150. At least 150 can be broken. All right, so it can break above that 150. All right, so this is the chart which I was searching over there. So I was talking about the euro dollar. Okay, I was talking about the dollar. Okay, so on dollar we were expecting previously, we were expecting this chart. All right, we were expecting last week euro to break down this move. We were expecting short opportunities over there, and before that we were selling euro dollar here at this area. We were expecting dollar strength. We saw a nice aggressive sell-off over there, and then again last week we saw a quick recovery because Trump tried to control the market, to control the damages, and then we saw aggressive sell-off to the downside, and we got these moves as well, both moves. Okay, we got that move as well on the pound dollar. So dollar is actually strong, right? And we are expecting dollar to get more stronger, right? But right now we are expecting dollar to pull back. I mean, dollar to fall. Correction is underway. I will talk about that. All right, but this is the chart. Right, we are expecting simply dollar, I mean, no rate cut at all. All right, no rate cut at all. That's why we look at the Fed watch tool as well. Okay, so we are expecting a complete drop this move. Okay, at go to 1. All right, go to 1. So euro dollar to go to 1, or at least 103, these areas. This much strength we are expecting on the dollar. This is extreme, all right? But you can see that the crisis started to hit the market, the oil. Okay, previously when you saw that oil went when you saw the Ukraine war, all right, Ukraine war. If I'm gonna pull out the oil chart here, when you saw the, all right, so here this chart. Let's look at the weekly chart and weekly chart here. We saw a tremendous strength. Okay, in there. Okay, this is the when inflation came. Okay, we saw oil went higher towards the 129. We saw a huge drop on the euro dollar. The euro dollar started to fall from 124. Okay, we saw oil started to fall from 124 and went all the way up to 1. All right, that's where the inflation came. All right, or oil went higher towards that 129. All right, and we already hit that 119. All right, and as I said that if war drags on, okay, oil can stay elevated to that top like it did back in 2022. Oil remained close to 120. Okay, which can give you tremendous strength on the dollar, and euro can struggle, you know, badly against the dollar, and we can see we can see that. I mean, a drop on the euro all the way to these areas. Okay, range. This is the range where euro can stay. All right, so oil is very important for the euro. Okay, so I mean, euro is simply sensitive to oil. Europe depends on energy, and energy comes out from the other countries. All right, and if they don't get energy, then the Europe economy gonna struggle and their currency gonna fall badly. All right, so dollar, all right, dollar can go all the way towards that 110 dollar index. All right, DXY, I'm saying we can see tremendous strength on the dollar index. Right now, if we're going to talk about that lower time frame, all right, so we are expecting pullback. All right, we are expecting pullback, and pullback is already underway. We were expecting pullback last week's, like, let me bring out that chart, like how we are expecting pullback, dollar to give us a correction. Right, last week we were anticipating dollar to gain. All right, and dollar is gaining. All right, this is what we were expecting last week, strength on the dollar, and we got nice strength on the dollar. Right, so we were expecting these drops. And we were expecting gold to fall too. All right, and gold dropped, and gold went lower from that top. We were expecting drop on gold, and we have drop on gold as well. So we saw strength on the dollar. Basically, we saw strength on the dollar, and other assets, they struggle against the dollar, and gold was also included into that. Okay, this is the chart which I was searching. So okay, so we were expecting a drop, move, euro move to complete. Okay, nice move came over there. Now we are expecting a pullback on the euro dollar, which is very much similar like this. Okay, and we can see that the pullback has already begun. We saw that move already there on the euro. Okay, and then we are expecting a pullback, and pullback seems that has already begun. All right, and this is the chart which I was actually searching. So we can expect a pullback. If I'm gonna look at the euro, okay, and then gonna talk about that DXY. All right, so pullback has already begun. Okay, and this pullback means that we can expect gold to go higher from 5,000. All right, 5,000 or 4,950 to find a gold, to find a floor over there and give us a pullback. Okay, let me give you an idea that how long that pullback can go. All right, so you can expect all right, so almost 50% retracement. Okay, so 50% retracement means 50% retracement, right, of this previous drop. So 50% retracement. Okay, so 50% already has begun over there. Okay, we bounced off already from that floor, which is at 1.14 100. All right, and we bounced off from there, and 50% it comes over there. So we can pull back again, right, like we did here. Okay, we can see another pullback like this, and we can continue to keep rising towards that 1.1540, and then we'll see if either we're gonna get draw from there for another leg lower or what. All right, so highly likely you're gonna see another leg lower. All right, from there, once price gonna reach to that, very likely we're gonna see another leg lower. Okay, but here is the trade setup, which is, you know, setting up over there. All right, the trade setup is that if you see that the euro continue to keep pushing towards that 50% target, all right, then if you trade on gold, okay, gold gonna be at a good spot to look for buy. Gold is already at a good spot to look for buy right now at 5,000. All right, at 5,000. So let me talk about the gold first, and then we're gonna talk about that. Let's open the gold here next to the euro dollar. Okay, so we saw that move. Okay, let's check this first. Okay, let's check this first. Okay, gold. Okay, let's go to the euro first. Right, this chart. So we were expecting the euro to fall. All right, euro to fall here. Before that, okay, this is late chart. Okay, we were shorting it, we were selling it from here at this area. So this is the update after that. All right, so the point here is that, okay, the point here is that we were expecting dollar to gain and euro to drop. Okay, we saw that move, we saw that drop. Okay, price went up to 1.14 at this area, 1.14 all the way here. All right, we saw strength on dollar against the euro first. Okay, so what I'm saying in other words, okay, let me right, so you can see, I can see there. Let me bring another chart. Okay, we have another chart here, this chart. Okay, this is basically inverted chart. All right, assets are inverted and the dollar is normal against the CAD. Right, we can see there clearly that the dollar is falling here. Okay, dollar, hopefully you can see my chart. Okay, dollar is falling, correcting the correction which we are anticipating 50% retracement. All right, so we are anticipating 50% retracement, and we are having that retracement. Okay, we are having that retracement here as well. Okay, all these, all right, all these are retracing. All right, so euro is also retracing. The retracement can happen towards that 1550. Okay, but we don't see that strength on these metals yet. Okay, metals are not, dollar is not falling against the metal yet. Okay, you can see there the gold is still struggling. All right, so 50% retracement I haven't measured yet, but 50% retracement can come somewhere here at 51.20 or 51.60. All right, so they are at a good spot. Okay, gold is at a good spot to look for it to go higher, and silver to bounce off as well. Okay, we can see that the copper is also started to move. Okay, but we can see there that the gold hasn't moved yet. Okay, so this is the opportunity you're looking right now on the gold. Okay, so let's I mean, this is the opportunity you're looking right now. Okay, we were expecting here euro to fall. All right, euro to fall, euro went lower. Okay, then we were expecting, before that we were expecting gold to buy, but when we saw that the dollar started to gain against the currencies, okay, then we started to look for gold for another leg lower. Okay, we saw that one more drop on the gold. Okay, we saw another, and yeah, and then we were expecting it to break through this and then continue to keep heading towards that 5,000. Right, we saw the gold to struggle here at this area. We were expecting, I mean, gold to struggle here at this 5,200 and give us another leg lower at 5,000. So we had that move. Okay, we had that move, this move. All right, so we saw that one more leg drop there, expecting it. All right, so if I'm going to look at the gold chart now, okay, so here, okay, no, I hope you understand that now. All right, and you, by looking at those past charts, you guys got the idea that what we should expect. Okay, we are expecting a pullback on the euro dollar to give us a pullback up to that 50% retracement, which is comes at a 1540 or 1550. All right, so 1550. So this pullback, another pullback is likely before we're going to go back up. All right, and you're expecting a similar move. Okay, and in best case scenario, we can see that the gold can go back up all the way to that top. Let me follow that. All right, this move started from there and ended here. Yeah, gold slightly went lower than this. Okay, so we're expecting euro to go back up. All right, and you're expecting the 50% move, 50% here at 51.20, as I said earlier. Okay, so 51.20, you're expecting gold to go there. All right, and in best case scenario, we can expect gold to go to 52 area. Okay, longer term chart, I will look at that, but you're paying attention at this floor right now, right? As I have shown you in this chart, right? That chart, this chart. Okay, gold, dollar is losing, so you're expecting this move. All right, our move already has started over there. Dollar getting weaker. All right, but you are still looking that to appear. All right, hopefully you understand that. All right, and opportunities there. Okay, so we're expecting this to go back up, pull back. All right, this pullback 50% retracement, and then we're going to look for this to bigger time frame. Okay, let me talk about the bigger time frame, a time frame now on the euro dollar. On the bigger time frame, we are expecting this move. Okay, let me find that chart as well. All right, let me find that chart as well, guys, for you. Okay, what we are expecting, as I said, that we're expecting the dollar to get stronger for longer term. Let's go find that chart. So the date is 26 9 February. So let me find that chart. It's a weekly time frame chart. We saw tremendous strength on the Australian dollar. Okay, why we saw the strength on the Australian dollar? Because we are having a rate divergence between these major banks. All right, the interest rate right now in the ECB in the Europe is 2.25, while the interest rate in the Australia is going to be 4.10% this week. Means that the Australian dollar is a higher premium currency and getting strong against the euro aggressively. Euro Australian dollar is falling on a bigger time frame to the downside, which is a signal that euro has found its top for longer term on one at 120. People were calling that we're gonna have 125, 130, blah blah blah, right? But finally, that's not going to happen, specifically after the shock which we are having on oil. So we should not expect, the euro to continue to keep rising, specifically against the dollar. All right. So as I said, that oil, euro dollar is sensitive for euro. Okay, there we were expecting the euro to find a top over there, right, and then give us a continue to keep dragging lower. Okay, then we saw that's the same chart, right? So same chart here, and then we saw that the euro started to find its top over there and 120 and started to catch up the euro Australian dollar. Okay, so we are within that trend. Okay, now we are where we are right now. We are here at this area. I mean, at this area. Okay, 114. We are 114. Okay, and up to this level. Okay, euro Australian dollar is running somewhere close to this low, I guess. We'll look at that. Okay, so which is very, very far away. So move started. This bullish move started back in November 2025, 2024. All right, November 2024. All right, so we can see there is a rate divergence. Australian dollar having 4.2010. All right, 4.10 this week percent, while the euro is having 2.25. Okay, so it's a high premium, currency, the Australian dollar, which is causing the euro to fall aggressively to the downside. This is actually a sign that the euro has found its top over there for longer term, and we can see that trend, this trend to appear here is already appearing over there. Okay, so if I'm gonna look at this weekly time frame chart now, okay, we are expecting it's much lower than I previously thought. Okay, so we can see that the move has begun over there after that Middle East conflict. All right, the move is happening over there. Okay, so we are not anticipating a big move over there, go back to that top and then drop. All right, so simply any pullback you see going to be an opportunity for this to continue to keep dragging lower. This move can be a very, very aggressive. I mean, when I talk about the euro, okay, actually I'm talking about the dollar. Okay, I'm anticipating dollar to be very, very aggressive, dollar to be strong. Okay, when dollar is going to get strong, it's going to get strong against the whole market, not just against the euro. All right, and this move can be a very, very aggressive here. Okay, very aggressive to the downside. Okay, so in short, any pullback you see on dollar going to be a buy opportunity. All right, so let's go to the DXY now. Okay, so 50% retracement, and then you can expect it to continue. 50% retracement of this and continue. All right, like this. 50%. Let me pull out the moving average. Okay, so 50% retracement, pull back. Okay, and continue to keep pushing higher. All right, so that's your dollar. Okay, I will look at the rest of the currencies later on, but let's start from the gold now. Okay, on gold, we are expecting gold to go back up. All right, as I said that we are expecting gold to at least go up to 5120. Right, so 5120. So you are looking gold to hold this floor. You go up to 5120, this move, and best case scenario, go all the way back to that top. All right, this floor to hold, this move, and in best case scenario, go all the way back to that top. Right, first this target. First this target and then this. 52.50. And in best case scenario, go all the way back to that top. Okay, so we're expecting this to go that much, at least this much first. The triangle. All right, so this is what you're expecting on the gold. Right, gold against the yen. All right, so hold that floor and go back up. This move. And in best case scenario, continue to keep rising. All right, and gold against the Australian dollar, it can slightly drag lower before we're gonna see that the price can go back up, as we can expect the interest rate hike on the Australian dollar. Okay, it can drag slightly lower before we see, at least this much move. Okay, this much move, go back to that top. All right, so if it drags lower, all right, so you're expecting it to bounce off. All right, so gold against the New Zealand dollar, very much same. Expecting it to hold the current price. Okay, bounce off from there. And if it fall back aggressively, then still go back up. Right, so gold against the euro, same structure, same everything. All right, so current price to hold, bounce off. And gold against the pound as well, very much similar. This floor, okay, that floor to hold and go back up. It's in best case scenario, continuous trend. All right, so hold that current price floor and go back up. Once we're gonna see that the gold is rising against the, we are anticipating pullback. All right, so let's look at this 4-hour time frame. Okay, so once we're going to see that, highly likely we're going to see this chart going to go back up first. All right, so this chart, highly likely you're going to see that this chart going to bounce up first. Okay, we are anticipating this move. Yeah, this move up to 5120 pullback. Highly likely we're going to see that the yen going to get weaker first. All right, and then you're going to see the the chief, all right? So the chief can get weaker, all right? Then you can expect the euro to get weaker, right? Then pound to get weaker, right? Then New Zealand dollar, right? And then at last we can expect these two to get weaker, right? These two, gold against the dollar and the CAD, and at the very last we can expect the Australian dollar to fall against the gold. All right, but this is the move, okay, on all gold pairs. Okay, the bounce off from the current price. Okay, current price. Same. Okay, the current price to bounce off to hold. Don't break out, break down. Just bounce off and go to that top. All right, so we are having already. I mean, dollar is getting weaker already. Pullback is happening. Okay, and same goes with the CAD. Gold against the CAD. Okay, silver, very much same. But basically we are talking about the dollar, all right? When I'm looking at these charts, gold, silver, all right, and or other currencies, okay, we are actually talking about the dollar, how dollar should behave. Okay, dollar was strong, okay, but this week we are anticipating dollar to a slight pullback. I mean, for before the Fed rate decision. Okay, this is the projection for the before the Fed rate decision. Before the Fed rate decision, dollar to pull back. Correct. All right, correct. Go back up. Silver can push up to that 88 area. All right, and other metals can behave the similar way. All right, so go back up. Palladium also to go back up. It's much weaker than the silver. But if you trade that, you are expecting it to go back up, and copper as well. All right, so similar move. All right, so copper also bounced off this top, go back up. All right, so and on euro dollar, we are expecting pullback. On pound dollar also we are expecting pullback. All right, so the pullback is we were expecting it to, okay, so similar like the euro dollar, but we are expecting longer term on this chart. Let's compare that chart with the pound dollar rather than looking at the euro dollar. Okay, we started the move from here. Move these eyes, big eyes. Okay, we started the move from here, right? And you can see that, let's say this. Okay, we found a very, we had a very nice aggressive run off over there. Okay, we had a run off over there, and then we found a top over there, very much similar like the euro dollar, and we are going down. Okay, we are expecting similar copy paste move to appear over there on the pound dollar, then pound dollar to continue to keep dragging lower towards that 121. Oil shock, we are having oil shock right now, means that the policy from the central bank is going to change completely. All right, and the higher the oil goes, okay, the longer the oil remains elevated for upside, these currencies going to struggle against the dollar. All right, so which bank was under pressure from Trump was bashing the Fed, the Powell. Why not cutting the rate? Why not cutting the rate, Powell? You're supposed to cut the rate. All right, but Powell was not cutting because inflation was well above the 2% target. Okay, now who's right after Trump action in the Middle East? Powell, of course, is right. He wasn't cutting the interest rate. Now, after energy shock, all right, who's going to feel better right now? Obviously, Powell going to feel better right now. All right, he gonna end his term at you know uh, good. All right, I mean, he's not going to be humiliated as Trump is being humiliated right now across the world. All right, so Powell was smart. He wasn't cutting the interest rate. Now, whoever gonna come, I mean, the next Fed chair, which is coming, all right, so he's not going to cut the interest rate as long as oil remains elevated for upside. Means that no interest rate cut, even you should expect interest rate hike. Completely 90-degree change into their policy means that dollar gonna be a safe haven right now. Okay, and we can see this kind of aggressive sell-off here as well, which I believe that has already begun from that top. Okay, and we can see that 120 again. All right, 120 again. So this is a bigger time frame, weekly time frame. It's gonna take long time, lot of time to appear over there. Okay, but right now what we are anticipating on lower time frame, okay, 50% pullback, which seems that has already begun. All right, the Australian dollar has gone much higher at the moment. All right, so if I'm gonna remove that, we had very good trades last week on the pound. All right, very good trades on the pound. Okay, this was the pound. All right, so this is the pound chart. So we had a very good trade. We were expecting pound to hold these tops and continue to keep dragging lower. Very nice move appeared over there on the pound. Trending move. All right, this is the chart. Okay, now we are anticipating this to pull back, and after that pullback, we will expect it to continue its trend, bearish trend, to the downside. All right, so let me follow that rectangle there. All right, so you're expecting it to hold this area, all right, in this previous low, and go towards that 50%, and then we will look for it to continue to keep dragging lower. Okay, we can see that pullback, this much pullback on the pound dollar. All right, so dollar-CAD. All right, dollar-CAD is not a good pair at the moment to trade, to be honest, as the dollar-CAD is highly exposed to the oil. Right now, what we are having stronger dollar. Okay, but we haven't. Let me show you in a different picture. All right, so dollar gained a lot here. Let's invert that chart. Okay, so this is the floor. Okay, that's the top. All right, we saw euro fallen aggressively. Okay, broke through this 20 24. Let me check the exact date. 20 yeah, January. That's a 20 January. All right, and this is also a 20 January low top. All right, so we saw that drop, euro fallen, but CAD hasn't fallen against the dollar. All right, CAD hasn't fallen, so it's supposed to be here, but it's not here at this area. All right, so it's not here. It's supposed to be here, but it's not here. Why it's not here? Because of the oil. Oil is causing CAD to stay strong against the dollar. That's why we stuck into this range. All right, once oil comes down aggressively, then you're going to see that the dollar against the CAD going to go higher. So in short, okay, we may remains into these ranges, okay, for some time. You can see dollar can, struggle against the CAD and can go down again within these ranges. All right, if you want to sell, you can sell it, okay, for short term to the downside, back within these ranges. So we can stay in these ranges for a while as oil is up. Okay, let's simply look at the oil with the CAD. What happened when we saw spike on oil back? Ukraine war, right? So there we saw this spike, right? It struggled. Okay, oil was at there. Okay, it stuck. Okay, dollar stuck against the CAD. Okay, if I'm gonna pull out another chart, let's say another chart, another risk, let's say, yeah, good. I need those charts. So here, let's pull out the cross line first. Okay, there is New Zealand dollar. There is the Australian dollar. Okay, we saw trending move. Okay, this is a weekly time frame chart. We saw trending move to the downside. Risk on currency, New Zealand dollar, oil spiked 120, above 120.25. Okay, we stuck there in the ranges. Okay, but we saw trending move to the downside. Dollar gained. Similar happened here. Okay, Australian dollar went lower. Okay, dollar got strength, but we haven't got strength over there. This move, we haven't got a strength there. We got a slow, steady rise. Okay, we went higher. Yeah, so this is the lagging move here. Okay, we saw a quick aggressive move. This is when this happened. Okay, this aggressive move happened. Okay, this means that the catch-up move is appearing over there. Okay, dollar was catching up against the CAD. Okay, while we were having short move on the New Zealand dollar and the Australian dollar. Okay, so catch-up move appeared over there. And then again, we saw that when oil started to come down, okay, we saw a catch-up move here on the dollar against the CAD. Okay, so similar, this is a weekly time frame. It took a lot of time, right? It took a lot while we were having aggressive move there, aggressive move, but dollar CAD stuck over there in the ranges for some time. Okay, we can expect similar behavior there as well. Okay, for some time, dollar depends on oil. Okay, it depends on oil, how oil does. If oil remains at this top for some time, as we are expecting it to stay at top for some time, depends on the war. If our war drags on, okay, then we can see that the similar behavior can happen here, and then at the end we can see that the next aggressive move can happen over there. All right, so similar behavior. All right, so dollar CAD can stay, sideways for some time. You can trade for short term to the downside as long as oil remains higher. Okay, I'm gonna skip that. I'm gonna look at the Bitcoin. All right, so previously we were anticipating Bitcoin to rise. Okay, let's go to the old chart first. BTC, I guess, this chart. Yeah. Okay, so we were expecting Bitcoin to find its floor there at 60K. So we are having floor over there, all right? And seems that it's exactly doing in the similar way, the way we were expecting it to, find a floor over there and continue to keep rising. But unfortunately, we didn't see that move. We saw aggressive sell-off over there to the downside on Bitcoin. And we are having a very much similar correction over here. Okay, we're going to look at that. And there is a possibility that we still can see another leg lower back to this floor, or maybe new low, and then we can start pushing higher. Okay, but this is how the structure is developing over there on Bitcoin. Okay, we may, I mean, this might be a floor over there, and we can continue to keep rising towards that top all-time high. Okay, or another leg lower possibility exists over there, which can put the Bitcoin at 10k, sorry, 50k. Okay, all right. So again, it's the Fed. Okay, the Fed policy going to decide that is it trending for upside, or we are going to see another leg lower. All right. So 90-degree change. Remember that 90-degree change can happen in the central bank's policy. Means that stronger currency, stronger dollar. All right. So okay, now you can see there it's doing exactly the same way. The chart, the update which I was showing. Okay, we saw this move. Okay, and then we are breaking up. Okay, and there is a possibility that it can struggle within the moving averages and can test this floor. All right, or new leg lower before we're gonna start going back up. Okay, so Ethereum is also exactly doing the same way. So let me pull out the moving averages. Okay, it can struggle again within the moving averages. All right, like it did, it struggled within the moving averages and went into a correction and then simply dropped. All right, if we don't see much strength, if we don't see much momentum on this indicator, all right, and it stopped fading like it did back there. All right, if we don't see momentum over there in the MACD, okay, then you know, very likely that the price gonna struggle here within the moving averages. All right, within the moving averages, and we can expect another leg lower back to this floor or new low. Okay, similar like this move, like that move, these moves. All right, so there is a possibility for this floor or another leg lower back to this 50k mark. All right, why 50k mark, guys? Okay, let's look at this. USR, USI or YY. Right, and if I'm gonna pull out the USINTR on top of that, USINTR. Okay, what? Let me change that color. Red. Okay, this is the interest rate, okay, which is at their 3.75, 3.75. Okay, the inflation is at, I guess, 2.7. Okay, 2.7. All right, so inflation is at 2.7. All right, before going to look at the Bitcoin, we should look at the oil. Oil is very important, okay? Very important. You cannot ignore the oil. Oil is very, very important. Okay, you cannot ignore the oil. You cannot ignore the oil shock. Okay, it can even get worse. All right, even can worse means 150 is on card. All right, so back then when we had that shock, all right, the shock happened here. All right, there. Okay, first we're gonna look at this. Okay, this floor. Hopefully you remember that when we had that negative oil, when oil went negative. All right, so what happened here when oil started to rise? Okay, everything was just, I mean, 50, a 0% interest rate hit the zero. I mean, US interest rate hit the zero, and inflation also hit the zero. Right? They print so much money. Right? They print so much money to restart the economy. US M2. Money supply US M2, I guess. US M2. Yeah. Okay, they print the tremendous money. There you can see that the green line. Hopefully you can see. Let me make it bigger. Okay, so this, when everything hit the floor, inflation and interest rate, they print tremendous money to restart the economy. All right, to restart the economy. What happened after? Okay, we saw oil started to rise. All right, they print a lot of money. Right, then we saw that inflation started to pick up. Then we saw that interest rates started to pick up. Okay, this shock, okay, this inflation shock is appearing now. Okay, we can see there that they started to print that money again. All right, we went higher even that previous top, which is 21 trillion. All right, 21 trillion at that top. Okay, we went much higher now. We went at 22.4 trillion. All right, 22.4 trillion. Okay, this is not appearing yet here on the inflation. Okay, the money supply is not appearing over there on in the inflation. Okay, inflation can come. All right, and oil is telling us that the oil went higher too. Okay, we can see that the inflation can come. When inflation comes, okay, you're gonna see that interest rate not gonna come down, which is at 3.75. Interest gonna go back up. When interest rate gonna go back up, you're not gonna have cheap money to invest into the crypto. You know, you have to, if you want to start a new business in the crypto and you need a loan, okay, you have to pay, you know, so much money on that loan. All right, so expensive loan. All right, so I mean, you can invest into the US treasuries. You can even get a constant, you know, earning fixed income from the treasuries rather than, you know, putting your money into the risky assets. All right, okay, so this is a risk for the crypto. Higher interest rate, okay, higher interest rate or higher oil prices still can put some impact on the crypto market. All right, hopefully you understand that now. So the Bitcoin can still struggle. Okay, we may not see the longer term rise on the Bitcoin. All right, we were expecting it to give us a floor over there and go back up, but unfortunately we can see there that the war broke out and people already sold it and went lower. Yeah, we saw some moves over there on lower time frame, but we did not see continuation. Okay, we did not see continuation. We stuck over there. We were anticipating it to hold that top. All right, this previous 95. Okay, but we dropped from there. Okay, but we never found floor over here within these areas. We just started to continue to keep dragging lower. All right, and there. Okay, we were anticipating a buying, you know, opportunities over there. Some buyers were sitting over there at 87 areas, but I mean, price was so aggressive to the downside, it never recovered. Right, it never recovered from that floor, and we continue to keep falling aggressively to the downside. Yeah, we did not see floor over there on Bitcoin. We broke out to the downside at this area. Okay, there we were anticipating it to come down, give us this formation, and started to continue, but we did not see. Okay, we went into a correction and bang, we saw a crash. Okay, so right now, okay, as I said, that the fundamentals are changing. Okay, the fundamentals are changing, and we may see higher interest rate. Okay, and that higher interest rate can weigh on cryptos. Higher interest, I mean, the hawkish Fed can you know, limit the rise on the cryptocurrencies and specifically on the Bitcoin, and we may not see that run. All right, we may not see that run at anytime soon. And we can see sideways market over here, a new leg like that, and then when rates started to fall, then we can see that the Bitcoin can continue to keep rising for upside for longer term. Okay, if you are trading for short term, all right, so you can trade for short term on lower time frame, like these moves, all right, like these moves. Pullback comes and you can expect it to fall further the leg lower, very much similar like this, the way we were anticipating over there. Okay, fall down and you can expect it to hold and go back up. But right now I don't see Bitcoin to give us a sustained longer term bullish move at the moment. Okay, specifically after that oil shock, as stagflation risk is rising. So very much similar on Ethereum. All right, that's below the moving averages. Okay, momentum can fade again over there, right? Momentum can fade over there, and you can expect that the price can go push higher and struggle over there, and we can go down. Okay, rather than we can, for next move, okay, we can expect another leg lower, which can test this lower, even can slightly go lower than that. All right, so indices. Okay, indices. As I said, that oil gonna be the key, all right, but ultimately the direction after this shock gonna be bullish. Okay, equities gonna form a longer term buy opportunity sooner or later. Once not sooner or later, it is definitely going to take some time. It is definitely going to take some time. Okay, but as we can expect, the previous shock. Okay, here, where is that oil? Okay, here, these areas. Okay, when oil went that high, we saw that the Nikkei went sideways and then broke out. And we saw a very aggressive run over there. Okay, so we can struggle here within this area for some time, and eventually, this to go much higher. All right, so you never know, to be honest, how worse this shock can be. This oil shock can be. You never know that. Right now, they are calling that the historical, disruption in the oil market. Historical. Okay, the IEA released 400 million barrels. 400 million barrels. They never released that much oil before. All right, but we haven't seen that shock yet on the risk on assets. All right, that hasn't. Risk on assets still behaving like there is, nothing happened in the market. All right, so risk on assets think that Trump gonna come out and Trump gonna call that we won the war, and that's it. All right, that's it. That's what a risk on asset is showing right now. Nothing has happened. Okay, just keep buying. That's what they're saying. Yeah, but we can stay into the sideways market for some time before we're gonna see the bullish run for upside. Okay, but yeah, you should remain bullish for longer term. All right, so you shouldn't look for sell. You should remain bullish for longer term on the risk on assets. All right, and you are looking for this floor and that move, and in best case scenario to go all the way back to that high, right? So this is gonna go higher. The Nikkei index gonna go higher. Why the Nikkei, Japan JP225 will go higher? The reason is very much simple. All right, what's the reason? The reason is the oil. Okay, oil, the 90% oil comes from the Middle East for the Japan. All right, Japan has also released their oil reserve, but their oil is coming from the Middle East. All right, and Japan relies on the oil. All right, And if oil remains higher or elevated for upside, okay, so the yen gonna be sensitive to the higher oil prices. I mean, yen gonna be weaker. When yen gonna be weaker, okay, you're gonna see strength on the Nikkei index, and the JP 225 gonna stay bullish for upside. You're not gonna see much drop on that. Okay, so so we saw that strength on the dollar. Dollar went higher. Dollar basically went higher. Right, we saw that the dollar went higher, and yen got weaker. All right, so this move, all right, you're gonna see. I mean, basically, this is not a perfect indication for you. So the perfect indication is the CFE yen. All right, so we saw a drop from. Okay, we saw a drop, and we are having drop here. So, yeah, it's trying to push higher for upside. All right, if it goes higher, we're gonna see that this is also gonna continue to keep pushing more higher. Again, the dollar yen gonna go down. Dollar is obviously lagging at the moment. So this is your indication, okay? And the risk on currencies to go back to that top, or in best case scenario, go all the way back up. So bullish on the indices, okay? They sideways bullish. Okay, we may see a struggle. We may not see all-time high at the moment, all right? But short-term bullish. Remain watch these floors, all right? And look for this to go back up. I mean, these small trades. Same on the US indices as well. Okay, so same. Why we have that? I mean, the reason is simple. All right, war broke out, oil went higher previously, but right now they are bullish. Okay, let me bring one more chart. And there you're gonna see. Okay, so first, before that. We started to analyze the dollar. All right, so we analyze the dollar. So dollar falling. Yeah, dollar is falling. Okay, dollar falling, Australian dollar going higher, dollar falling, New Zealand dollar going higher. Okay, Bitcoin is also pushing higher, but we haven't seen that strength yet on the indices. Okay, indices can also catch up, and the move started from that top. So indices, how far indices goes we'll see. Okay, but it's a short-term buy opportunity back to that top. In best case scenario, go all the way back to that top. All right, and Nikkei index is also at a floor which can go back up. So pullback is coming. Okay, so I'm gonna draw some trend lines on that. And some moving averages. All right, so some moving averages. This I mean, go back up simply, guys. This move. Okay, we may not see whole move towards that all-time high, okay, but you're expecting it to hold this floor and go back up. a risk on move. We are already having, guys, I can see the risk on move is happening over there. Let me bring another chart for you. This is inverted chart. Okay, you can see there that the lower time frame this is inverted chart. All right, the dollar is falling. These are inverted charts. Dollar is falling. Okay, CAD gaining, dollar falling, Australian dollar, New Zealand dollar. Okay, copper is also, we are having some strength as well on the silver. Okay, and bang, there you go, gold started to catch up. Okay, at the start of this stream we were talking about the gold to find a floor, so gold is catching up, right? Gold is catching up, so the chart seems to be here, and there, this is the chart. All right, so where was the gold at that time when we were talking about this chart? The gold was at 90.49, right? So 49 49.70, let's say that. All right, so we are having gold right now at 5,012. Okay, so 5,012, so heading towards that target, the target which we're talking about. So the move is happening already right now. Okay, the move is happening over there. Right, so dollar is getting weaker. Yeah, so gold is going higher for short term, which is a good move. Okay, so let's get back to the indices. Okay, so indices, they haven't moved up yet. We haven't got the strength on the indices yet. Okay, if I'm gonna look at that chart and pull out the, let's say, the Australian dollar chart with it. Okay, so the backbone for the market is the dollar. So if you understand the dollar, okay, so the rest of the market is going to be easy for you to grasp. Right, so the move started from that. Okay, there is another thing which you need to consider. Okay, what we talked about at the start of the meeting stream, that the RBA is going to raise the interest rate. Okay, and Australian dollar is pricing in for that. Okay, that's why it's rising, pricing in for that. Okay, 4.10, they're gonna raise with 25 basis point, which is gonna be 4.20, 0.25. I'm gonna put at that 4.10, and just pricing in for that. Okay, but let me pull out. All right, let me pull out that cross line. Let me pull out the fib lines. All right, so let's start from that top. So we have already retraced 38%. This is a risk on currency. Okay, and we can expect it to go more higher. Why we can expect it to go more higher? Because of the rate hike from the RBA. All right, if RBA raise the interest rate, Australian dollar can push more higher. There's a very good chance that it can go all the way back to that top. All the way back to that top. Very good chance that it can go all the way back to that top. Tonight, all right? Tuesday night. The rate decision is tonight, Tuesday night, all right? And if that happens, okay, the indices needs to catch up to that move. Right, so we can see buying on the risk on assets as well during the New York session today and tomorrow. Risk on move. Okay, so you're staying bullish on the indices. first of all, for short term, look at these moves, and if in best case scenario, go back up. It's the same move, guys, on all indices. Gold is hitting 55,020 right now. Okay, so I'm gonna look at the 4-hour time frame chart. Okay, let's see this. I mean, 4 charts, all right? 1 hour, 1 hour. To cover all these charts at once. The US 30 to hold that floor, which is trying to hold that floor for short term. And the S&P 500 to do the same. So basically, we are anticipating a risk on move this week. I mean, before the Fed rate decision, as I said that, or liar. Okay, so hold that. And first this top. All right. I mean, this top and go all the way back to that top. S&P 500, right? This top. In best case scenario, go all the way this top. In best case scenario, go all the way back to that top. Okay, so yeah, that's you're looking for. Previously, we were anticipating US 30 Dow to continue its trend. Okay, this is a video analysis. We were anticipating it to give us a short-term move. All right, and we had that short-term move. We were anticipating that short-term move, so we got that move nicely from this floor to this top. Okay, but we did not see aggressive run. Okay, and then we saw a total draw from there. Okay, we saw that move, short-term buying here at this area. Yeah, small move. I mean, short-term move happened over there, and then we saw the drop. So there. Yeah, here. Right, so we saw here. Price tested that, and then again, boom. Right, then we saw that the news, the war broke out. Okay, war 27. Okay, war broke out, and then war, brought it down aggressively to the downside. So there is no reason to buy indices when there is a war. All right, it's a risk on. This is a risk on assets, and obviously you're gonna see that it's gonna go down. Okay, hopefully you got my point right now. Okay, we are having some move on risk on currencies. They are up, and risk on assets, they are not up yet. They are not rising yet, and we can expect them to go back up as long as risk on currency, as long as dollar goes down. As I said that in a correction, for a correction, that goes down, you're going to see that the rise will happen here. All right, so let's make it slightly bigger. Okay, so in best case scenario, this move, in extremely best case scenario, that move. Okay, and in a if Trump is going to do something, all right, then continue its longer term trend and hit that 27 of this move. 55. Okay, that's how, I mean, right now you're not expecting this move. I mean, this is not a best case scenario at the moment. Okay, just this. Okay, that's okay. Done. 48. Go to the 48 areas, and we'll see how it does after that. Okay, and this to break out. All right, this is setting up for a breakout, and you are expecting this to hold that floor. this previous floor. Another leg lower, breakout, and continue. If I'm going to pull out the moving averages, we can see there that the price is struggling to push lower. Okay, coming up, dropping, coming up, dropping, coming up. All right, and trying to, I mean, it's slowing down. Okay, it's slowing down. If I'm going to pull out the momentum indicator as well, MACD. Okay, MACD is clearly showing us that the breakout is very likely for upside. Or you can call that divergence. Price is falling, okay, while the indicator is rising. Right, and we are having indications from the other assets as well, so we can expect it to break out. So Dow to hold and break out, and similar, you know, with the other assets, with the Nasdaq. We can hold that floor, go back up this top, and in best case scenario, similar like the Dow. Right, so similar like Dow. One more drop, or continue to keep breaking up. Okay, same goes with the S&P 500. Go back up. All right, so we've spoken about the dollar already, DXY, and Australian dollar. Let me remove this. Okay, so we can expect Australian dollar to slightly go back up, back to the top. Right? Back to the top. So last week we got a very good move on the Australian dollar. So we were expecting Australian dollar to drop. We were expecting it to drop from within these areas. Okay, from this previous top, it slightly went higher. And then bang on, we got a very good short opportunities over there from this previous top, and we saw a huge drop back to that low, and now we are going for another leg higher, and very likely that it can go back up to that top. All right, because as I said that the rate cut is coming. Okay, and the rate cut can push that up. All right, the rate cut is coming. This rate cut. All right, highly likely they're gonna raise the interest rate. 410. All right, 410, and the Australian dollar is already trying to price in for that, and we can see another leg higher. Okay, if we see that whole leg all the way back to that top on this currency tonight and day after tomorrow, if day after tomorrow Australian dollar is gaining all over, it's going to be a perfect signal for the risk on assets to continue to keep rising. If you don't know, guys, okay, don't know risk on, risk off, okay, you can search it, you can Google it, or you can go and ask the chat GPT what is risk on and risk off assets. All right, so let me find. Okay, so we are anticipating a risk on move at the moment for short term. Let me check if I do have that. There you go. Let me log in, and there you go. There is the risk on, risk off. Very. Hold a second. Okay, so risk on, risk off assets here. Risk on, risk off assets comparison. Overview is this. Risk on, characteristic, high volatility, sensitive to economic growth. All right. Common risk on assets, equities. All right. And common risk on assets, equities, growth stock, especially technology, small caps, emerging market equities, high beta stocks, cyclical sectors, industrial, materials, consumer, discretionary, currencies. All right. Common, we are talking about the risk on assets. Okay. Emerging market currencies, Australian dollar, commodity currencies, Australian dollar, CAD, Kiwi. Okay. Right now we are having strength on the Australian dollar, is a sign that we are having risk on move is building up over there. And if we see strength on the Australian dollar today after the rate hike from the Reserve Bank of Australia, Reserve Bank of Australia, it's going to be a very good sign that the other risk on assets also going to follow the Australian dollar. All right, that's what I'm saying to you guys. Rate hike is coming from the RBA. If you see that the Australian dollar is going back up, the whole market going to follow that. The average dollar going to fall simply. Okay, high yielding currencies, commodities, okay, industrial metals like copper, they're going to follow the Australian dollar, right? Copper and aluminium, crude oil, natural gas, simply basically the dollar going to fall. Agriculture commodities, base metals, all right? So when risk on, dollar going to go down. Okay, and fixed income, high yield corporate bonds, emerging market debt, longer duration, credit sensitive, alternative investment, real estate investment, risk on. All these are risk on. Private equity, venture capital, cryptocurrencies, many cases, right? And all right. So the risk of assets, we already have that move. Okay, we were licking that move last week, and we had that move already. Characteristic: lower volatility, more stable returns. Portfolio hedging, yeah, characteristic is that. So defensive in nature. Defensive means you are getting out of the market when you are looking for the risk of move. You are getting out of the market. You are putting your money into the dollar. Okay, safety. You are looking for the safety, and the dollar is the best safety when the risk of move appears. Okay, when it appears, okay, when there is war. Okay, right now we are having war in the Middle East. Dollar is safety, and dollar is up everywhere. All right, and the common risk of assets, safe havens, dollar. Okay, best safety is the dollar. That's why you have seen most of the charts which have just shown you the dollar was gaining. All right, so euro dollar down, pound dollar down, Australian dollar down. All right, or gold down. All right, equities down. All right, so all individual stocks are down. All right, and bonds were down, yields were rising, right? Government bond, U.S. treasuries, especially short term. Right now, what's happening? Okay, right now, I mean the bonds are not being bought. Okay, because of this war, the yields are rising. Okay, the 10-year yield is running, I guess, at above 412, 4.12 means that the bonds are being sold. Why? Because of the oil shock. Oil is higher, means that market is expecting that we're going to have inflation and higher interest rates. They are selling the bond. And what's the best safety right now? Dollar. All right, the dollar is the best safety. They're buying the dollar. All right, so risk of German bonds, UK gilts in normal market. All right, and precious metals, gold is not rising. Why gold is not rising? Because of this war, or silver is not rising, or platinum or other metals are not rising. Why they are falling? Why they are falling? All right. Okay, the best safety is the dollar. Everyone is running after the dollar. Why they are not running after the gold? All right, silver, all they are falling. Right, they are you know, they're selling their metal positions, they're selling their gold right now, all right, and selling silver, and they are hedging their, you know, position with the, I mean, they are securing their a position on the indexes, right? They're selling gold and they're buying equities are falling, all right? They're putting money in there for longer term, right? Or we can say that we are having a liquidity, you know, uh, you know, liquidity is you know, squeezing. Liquidity is getting out from the market. That's why everything is falling and dollar is rising. All right. And gold and silver, they are not playing as a safe haven. So they should go up when there is a war, but they are not. Right? They are falling in the Middle East war. The reason is very much simple. Liquidity. There is not enough liquidity. That's why everything is just falling. They are selling everything, securing liquidity. All right. And they are getting ready for the risk on assets for longer term. Okay. Defensive stock, utility, consumer, healthcare, dividend, low volatility ETF, cash equivalent. All right. So these are the risk on and risk off assets. So market rotation, right? And these are the portfolio implications, dynamics, key indicators, right? What we saw equity, you know, volatility index, VIX went up, credit spread, right? Widening, all right? It has widened right now. And yeah, so I mean, yen falls during the carry trade. Commodity prices rising when there is a risk on appetite with risk on sentiment. All right, so that's your asset class comparison. Okay, you can equities, risk on, risk off. Risk on, they goes up, these assets go up. Okay, risk off example, they goes down, right? And fixed income up, down. All right, higher yield bonds, they go up, and yields go goes down. All right, and currencies, they goes up, they goes down. I mean, they rise, so not that way. Sorry, I you know, I mean, equities up, all right, up, currencies up, all right, and up. All right, when there is a risk on, these currencies rises, and when risk off, these currencies rises. Okay, up. Commodities, all right, up, and gold, silver up. Performance, all right, so performance, this is the performance. So risk on, risk off efforts, underperform, better perform, 20% annually, 2%. All right, bear market 20 to 50. Small, you see small moves over there, 10%. Standard deviation 15 to 35, just 2 to 12. I mean, you see big moves, okay, on risk on assets. Big moves on risk on assets, and you see small moves on risk of assets. I mean, like mostly currencies and other assets, all right, they don't move that much in percentage wise. We see more aggressive moves on the risk on assets. Drawdown 30 to 60%, 5 to 10%. Recovery longer, faster recovery. So market environment indicator, right? So yeah, this is also important. Indicator VIX below 20, risk on. Above 30, bang, higher volatility. All right, above 30 means indices are falling. Credit spreads tightening. When there is a risk on assets rising, credit spread tightening, widening during the risk off. Dollar weakening, okay, strength when risk off. Dollar rise when, this is what we are having right now, okay, strength on the dollar because we are having risk off environment right now because of the Middle East war. Yield curve steepening, flattening in the risk off. Commodity prices rising, falling in the risk off. Equity momentum, positive, uptrend, bullish, negative, downtrend, risk off. Right, that's what we are having, risk off environment right now. Equities are down. Economic data above expectation, bang, risk on. Below expectations, risk off. Central bank policy accommodative, dovish, equities will rise. Restrictive, hawkish, equities will go down. Okay, this is what I'm talking about right now. Oil up, and we may expect hawkish and restrictive policy from the, no cut from the Fed. Okay, Fed gonna say that oil higher, why would, we need to cut. Oil higher, inflation will go up. We're gonna hold, and maybe we're gonna look for rising. Okay, this is what I'm talking right now. Okay, the risk on signal is appearing over there on some currencies. Okay, if that goes higher, you're gonna see that dollar gonna get weaker, which is already weakening. Okay, and steepening yield curve, rising commodity prices. Yeah, this is what I said at the start of the stream on gold. Okay, gold went up to 5,025. Positive uptrend. This is what we are looking. This is what I said to you. Look for equity to follow the risk on currencies. All right, and data is also going to be released. Fed. Okay, accommodative and dovish. Equity is gonna bounce back. All right, equity is gonna bounce back. We're gonna see rise here on the equities. Equity is gonna go up. If Fed is going to be dovish, but highly likely they're not going to be dovish. So that's why we're going to remain into the sideways market. That's why I said that you are not looking at a big move on the equities for upside, as we are having oil shock. They can be, restrictive and hawkish. And that's why I said that till Fed, you are looking pull back. Okay, you are looking risk on move till Fed rate decision. All right, and this is the conclusion. Understanding the risk on risk off, framework is essential for effective portfolio management. While these categories provide a useful lens for analysis, all right, so market behavior, successful investing requires balancing tactical adjustments with long-term strategic objectives. The key is recognizing that market sentiment cycles are inevitable and positioning portfolio to benefit from both environment while managing downside risk position. Okay, this is the risk off move. Last week we had already dollar went up. Okay, now it's pushing up slightly. Okay, risk on move is building over there. If that goes higher because of the interest rate, okay, you are expecting other risk on assets to go higher too. And there is the Australian dollar. All right, so we are expecting it to push more higher. Okay, if it goes all the way because of that interest rate hike, is going to be a very good sign that the other risk on asset gonna follow. So we can see there that the pound, I can see that the pound is also catching up the Australian dollar. All right, so catching up, and the euro is also catching up. There you go. Euro went into a pullback which I was talking about. So indices, they haven't pulled back yet. That's what you're gonna look for. So we were at the Australian dollar. All right, that's why you're looking Australian dollar to go back up. And in case we see that interest rate cut from interest rate hike from the RBA, okay, we can expect it to push more higher. All right, first of all this, and in best case scenario, go all the way back to that top, and we can expect it to go down from that top. Again, New Zealand dollar is also similar. I'm not gonna look much bigger time frame. Right, I'm gonna look at this to just go back up this move only. It has already pulled back. Right, so 50% of this move, which is already almost gone up. Okay, and in best case scenario, you don't have a buy opportunity or sell opportunity on this currency at the moment. Yeah, I'm gonna ignore the most of the charts, and yeah, we can see that the dollar can struggle. Okay, dollar slightly can struggle at 160. Okay, it can struggle at 160. The 160 right now, Bank of Japan and Ministry of Finance, okay, in the Japan, Ministry of Finance in Japan, they are not happy with the falling yen, okay? And they're saying that they don't want dollar yen to go above 160, right? They don't want that to go above 160. So it's a very good place to watch. If we see aggressive sell off, okay, then it can go all the way back to that low. All right, so you're watching 160 closely. If intervention comes over there, okay, this is the previously they intervene into the market. All right, and we saw that intervention coming. We were expecting this. I mean, when we saw this is the basically the start of the intervention. Okay, the intervention. I mean, when U.S. Treasury Department in the USA, they started to check the rate, the exchange rate. They did not do the I mean, we did not see the intervention. I mean, they did not actually intervene in the market, but they check the exchange rates. All right. Hello, Christopher. Hello. So they just checked the exchange rate, and because of those exchange rate, we saw this move, and people thought that the intervention is going to happen, and they sold dollar against the yen. Okay, so similar thing can happen here as well at 160. So you're paying close attention at 160. If we see aggressive sell and intervention again, okay, that gonna change the dollar against the others. Okay, dollar can fall much deeper against the other currencies. All right, like euro, Australian, pound, dollar can go much deeper. I mean, those currencies can go higher. Okay, so you keep an eye at 160. 160 is a very good indication for you to understand that either the intervention is coming or not. If intervention is coming, okay, dollar yen, I don't think so the intervention gonna come now, because you know the oil is gone higher. Yeah, oil is gone higher. The euro Australian dollar, okay, the euro Australian dollar, haven't looked at this chart, but euro Australian dollar is pulled back. Okay, what we can expect from the euro, this chart, okay, we can expect this to go down, this move. Remove that. We can expect this chart to go down. Right, why we can expect this chart to go down? Right, because the Australian, we look at the Australian dollar chart, and we said that the Australian dollar can go back up. Okay, if Australian dollar go back up, I have inverted that chart all the way to this top, okay, then we can expect the euro can fall. The euro can go down against the Australian dollar back to that low. All right, and for the longer time frame, okay, I'm not sure what you're doing. I don't see any opportunity on this for buy. No, obviously not at the moment. Okay, you shouldn't expect the buy opportunities on this chart. Absolutely no. There is nothing to buy on this chart. Why there is nothing to buy on this chart? Look at the rate divergence. Right? So AUINTR. AUINTR. If I'm gonna look at the AUINTR. Yeah, this is the reason why you are not looking the buy opportunity on the euro against the Australian dollar. All right, because the interest rate is going to be raised to 1.410. Right, and where is the interest rate? 2.15. Okay, 2.15 and 4.10. So higher, beta currency, right? The Australian dollar is a, higher premium currency, okay, while the euro is, 210, 215. All right. So obviously, you only can expect the euro Australian dollar to rise if ECB is going to say that they are going to raise the interest rate aggressively, right? Then you can expect they're going to raise the interest rate. Then the euro against the Australian dollar gonna rise back to the upside. So stay away from buying that chart, okay? Because there is no reason. Yeah, we can expect it can go much lower. We don't know the floor, to be honest, at the moment, okay? But what this was telling, okay, this chart, whenever this chart goes higher like this, is a basically sign that something is going to happen. All right, this time we saw COVID. Okay, you remember that 2020 we saw COVID, and this is the 2008, 9. I mean the mortgage crisis. Okay, and right now we saw that move up back to that top again, and we are having a Middle East war. Okay, now this chart is suggesting that we will come out this Middle East war and things gonna be normal, sooner or later. Means that risk on move. Okay, this is basically a signal. That we are going to see new highs. Okay, new all-time highs on the indices in longer term. All right, this chart is telling. Why this chart is telling that? Okay, when euro rise against the Australian dollar, euro is a semi risk on currency and semi risk off currency. All right, sometimes it starts to behave as a risk on currency, and sometimes it starts to behave as a risk off currency. Okay, while the Australian dollar is a pure risk on currency. Okay, Australian dollar is a pure risk on currency. When Australian dollar rises, that means risk on. Risk is on means you're buying the risk on assets. Okay, now Australian dollar has fallen. Euro has fallen against the euro. When euro was rising here, it was playing as a safety. Means you are selling the risk on assets. You are selling the Australian dollar. You are putting your money into the euro. You are searching the safety into the euro or other risk, risk of assets. You are putting your money into the risk of assets. You're not putting your money into the risk on assets. Okay, but we can see that the Australian dollar is rising. Euro is falling. This is a sign that we are going to see risk on move sooner or later on all indices, and index is going to find a new all-time high. Remember, this is a weekly chart. This is not a 1 day or 1 hour chart. Okay, I'm talking about a longer term perspective. Risk on assets going to break all-time highs sooner or later. This move is telling us that this war is going to pass on. Okay, and things gonna sooner or later gonna get better. Okay, or if war is going to get worse, all right, but market will use to it, like Ukraine war. Okay, market is used to the Ukraine war right now. War is happening over there, all right, but market is not reacting to that. Okay, and this is what this chart is telling us, that we're gonna see strength on the risk on assets sooner or later. And how higher the Australian dollar goes, okay, we don't know yet. All right, it can continue to keep falling all the way towards that 140, like we saw after 2020. Okay, huge strength on the Australian dollar, and euro were keep falling. Okay, and that's what I have shown at the start. We are expecting euro to continue to keep falling against the dollar. If that happens, okay, this will continue to keep falling. Yeah, so yeah, right now you should expect it to go towards that 160, as I have shown on the lower time frame. Okay, but there is no sign for the next bullish run at the moment. Right, so and you should expect it to just simply continue to keep falling like this move. Okay, and if we see that move because of the interest rate rise, all right, on the Australian dollar, okay, the pullback which you are having on the other dollar pairs, okay, I was showing pullback 50% retracement. Okay, after that 50% retracement, you're going to see those charts going to follow this move. They're going to go down. This is very important chart, right? It's a very important chart. This tells where the money is going. Either the money is going into the Europe or money is going out of the Europe, right? Okay, so not much on these charts. So oil, I have already told you, so same goes with these indices, all right? You're expecting them to go back up. Short-term buy opportunity. All right, so all these same move. Short-term up. Frank 40, short-term up. The same behavior you're having across these charts. UK 100. You can go back up. Oil, we have already seen the oil, and Microsoft. These charts are simply struggling, all right? They are struggling big time. The Microsoft, I mean the software companies are struggling, and they will find out their floor sooner or later, okay? Because the indexes are struggling and these are struggling as well, but sooner or later they're going to find a floor and will go back up. Personally, honestly, I don't see buy opportunity at the moment on these charts, but sooner or later, as I said, that euro Australian dollar is telling us that we're going to have the risk on move in longer term, and Australian dollar rising against the euro is sensitive to oil shock. We are going through the worst period at the moment because of the Middle East war. Okay, market was pricing in for that Middle East war. Okay, these risk on assets, they were pricing in for this Middle East war. Now that war has happened, right? Now we are having, you know, I mean, market will these risk on assets, they will price in for better outcome of this war, all right? And before this war stopped, market or all these risk on assets, they will stop pricing in for that good outcome. Okay, so they're gonna be a uh, buy opportunity, but we don't know yet where is the floor. Okay, we don't know yet where is the floor. This might be a floor, or maybe price can tag that 340 and can find a floor over there and can go back up. But there are many stocks which are struggling because of that. Okay, Nvidia is also struggling, so we don't know yet where is the floor. Okay, staying into that range. Apple also struggling. Okay, not sure at the moment where is that floor yet. Google also struggling. Google, by the way, made a very good move. Okay, let me find the chart if I can find a chart. Let me go there to find the chart. Let's leave it. It's going to take a long time. So we were expecting Google to rise from there, this area, these areas, and it made a very good move. Very good move we had on the Google. All right, so Amazon is also struggling. Struggling, they are down at 24%. Amazon, Costco gone up. Meta is also struggling, 27% down. Yeah, we don't know where is the floor yet. Honestly, we don't know, as things are not getting better yet, okay, in the war. So Tesla also, we were expecting, this is very old chart, we were expecting Tesla to go higher. We saw a very nice move on the Tesla at this area. We were anticipating a bullish move. Okay, this might be a floor. Okay, don't know yet, as I have told you that the indices are struggling. Okay, we may see short-term buying over there, like I have shown on the indices. All right, but this is not a I mean, not a time to look at these. In these, they're gonna go back up, right? They're gonna go back up, but we don't know where is the bottom yet. This move will come. Yeah, this move will come. AMD, Oracle dropped a lot, right? So we saw a very big software companies are struggling. 61% drop. All right, they will go back up, but we don't know yet that where is the floor, as we know that the indexes are struggling. Netflix bounced off, 44% down. We are up against the Netflix almost 33%. All right, 33% up. Netflix, so they're gonna go back up. Right, they're gonna go back up. These are big names. They're gonna go back up, and some others I'm having. All right, so this was 57% down, all right, and bounced off a little. So we are expecting this to rebound as well. All right, so these they are big down. Big drop. We're having an Adobe already seen 36%. So they are down because of the higher valuation. So many things are there. War, blah blah blah. No. Now oil shock, rates gonna go up. All these things are putting pressure on these stocks to struggle rather than going back up. Apple too. Yeah, Apple is also struggling. So there is no floor yet on these charts. Some of them are really strong, holding the indexes higher. Okay, so I hope enough for today, guys. Yeah, I hope enough for today. XRP. We'll look at that next time. All right, so let's see what we're gonna get. Okay, hopefully we're gonna get some good news this week, and we can expect the risk on move which we are talking about on oil. Okay, oil, still expecting oil to go and tag that top, continue. Okay, still expecting oil to give us a slow move. Okay, but as I said that, guys, Priory sold. They are not accepting that they sold the front month CFDs, all right, but they intervene. That's the reason we saw that kind of sell off. They can try again. They can try again to manipulate the price. So if you're buying oil, okay, short term take out, short term profit, keep taking out. Don't hold it for longer term. In case if very aggressive spike comes over there, then you can, you know, expect it to hold. All right, we are already above the 100. Okay, everyone is feeling the pain right now across the world. Okay, so thank you very much for coming in, joining the stream after a long time. Yeah, we'll see you back again, guys. Thank you very much.